Hi, this is Mark Carrington from mybitcoinprofits.com. It is April the 12th, and the question has been asked is how much more can the Bitcoin price remain compressed in its triangle that we talked about last week on the 5th of April. So let's step to the charts and have a look, see where we are. And I've been digging around in the last week trade opportunities with all sorts of trade entry strategies, and it's leading me to look elsewhere. But let's just look at the charts first of all. So we have the chart up in front of us. You'll recognize it by now. It's Bitcoin against the dollar. It's a daily, and there is our familiar triangle. And as a reminder, my preference is on the daily is to draw the lines from the closes, so using a line chart. So if I change this to a line chart, you would have seen that the lines would have been drawn somewhat differently. But these lines actually came off the weekly. So that's my other preference, is when I'm doing a line off the weekly, a chart off the weekly. So you'll see here on the weekly that the lines have been drawn from the tops of the bars to touch through the tops of the bars to touch as many bars as possible. So let's step back to the daily to see where we are. Let's make sure I've got as close to a year's worth of data on here. Oh, that'll do. It'll work well enough for what we're doing. And you'll remember last time we also talked about the possibility of the channel. So what we've got here is that the price is continuing to respect this short-term trend line. It is a line drawn off the daily, so it's connecting the closes. That's why it's painted red. But the price is stubbornly refusing to pass this horizontal level here. Just absolutely stubbornly refusing to pass. So we've had one potential attempt to break out. And this is ultimately what led me to look at the prices a little bit harder. And I'm going to go and tell you what I saw. Charting, technical analysis is ultimately all about looking for patterns that are beginning to repeat. And as we go back in time here, so we look at no time have we seen in the history of Bitcoin price a compression like this into a triangle. So this triangle is not only shaped by the downtrend line, it's also shaped by this horizontal line. So we can see here, we can see these cycles here, but we've got progressively higher lows and progressively higher highs. If we go back to this time frame here, and in fact what I'm going to do is I'm going to roll it this way. So we just do not have, even in these periods when we've been running down, we've had lower highs and lower lows each time. This one has been gyrating around, so maybe that is an area, but what I don't see is any similarity in patterns in here within this area and within this area. And rest assured, I've had a look right the way through the charts. So, and as we know, all this chart's reflecting is supply and demand in the marketplace. So I've started to explore a little more deeply what's actually going on here. And the first thing I'm going to do is, so we're going to expand out, and what I'm interested in is I'm interested in this period since this last set of adjustments here. What I'm particularly interested in is we've got this strong down here, we've got a down here, and we've got a down here. And each one of these downs has been a significant down, significant, i.e. significantly different to what's been happening in the days before. And they're not evenly spaced out in days. So if we go in to count them, so we go here, we've got 1, 2, 3, 4, 5, 6 days. We've got 1, 2, 3, 4, 5 days. So on the 6th day it went down 1, 2, 3, 4, 5, 6. So this one doesn't break the pattern. So it's a 7, 8, 9, 10 day. 11 days, so maybe that's the same as twice times 6. So we go 1, 2, 3, 4, 5, 6. So there is a pattern in here that is beginning to repeat. So the next thing I've started to do is to have a look at some of the blockchain data. And to do this, I'm just looking at the charts that come from blockchain.info/charts, and I've picked out 3 that are of particular importance. The first one I want to do is I want to have a look at, is there a correlation between the number of transactions? Is there a correlation between, and for that I'm going to use estimated transaction volume. Is there a correlation with exchange trade volume? And I'd expect there would be one of some form. And is there a correlation between trade volume versus transaction volume ratio? So if we just put the first one in here. Now the data here, this data is presented over quite a long time period. And so we're going to focus on the last 60 days. And really what I'm looking for is there that same pattern of days? Now it's a bit hard to tell on this chart exactly which day is which. So I'm not going to try to work it from the chart. I started there. I've pulled the data down into a spreadsheet so we can actually have a look at specific dates. But if I have a look at here, estimated transaction volume is that there certainly are 1, 2, 3 cycles or 3 highs, and there are certainly some low cycles which are spaced about that 7 or 8 days apart. We can download here with the CSV. So that's the first one, which was estimated transaction volume. I'll just, excuse me while we have to go through. We're going to then go do exchange trade volume. We'll do 60 days. And this is the one that was interesting to me, is to have a look and say, do these spikes here correlate with the days that we saw those corrections? So we've seen trade volume on this day here is 2.3 million, and the day before was 1.5 million. So that's a 70% increase, and it's a big jump from here compared to there. And we've got a spike here and a spike here. So they're similar 6 or 7 days apart. And then the last chart I want to look at is to look at the ratio between trade volume and transaction volume, just to see that if there is, what you'd be looking there is that, look, especially there's been a large number of transactions to, for example, I've just bought the Ethereum mining pool. If we got a whole bunch of people buying before closing date, you're buying in Bitcoin, so people are transacting into Bitcoin to enter the pool. The person who's setting up the pool needs to pay in dollars and then takes that transaction money, which they've received in Bitcoin, exchanges it back into US dollar to pay their suppliers to buy the mining equipment. Then you'd expect to see a correlation on this chart between the trade volume and the transaction volume. So we'll do exactly the same thing here. Take the last 60 days, and we certainly have the spikes, but this looks to me as it's not an ascending curve over the last period of time. Certainly over the last month, which is the month and a half we're interested in, it's sort of tracking sideways. So that's the data that I'm working on. Now let's, I'm going to pull my spreadsheet across because I found something rather remarkable. So I'm going to go back to putting the Bitcoin chart up. I'm going to change things up a little bit here. I'm going to squeeze this in here, and I'm going to slide my spreadsheet in here. That should do it. So we should be able to see what we're looking at here. And what I've done is I have downloaded the last 60 days. This is trade volume. So we can see down the bottom here, trade volume. Or probably if I put the marker there, we've got trade versus volume and we've got transaction volume. And currently we are looking at the trade volume sheet. And I've put a calculation here, and the calculation is very simple. All I've done is in this cell here, we'll see, well, we won't see because I'll tell you what's in that cell, is I've basically taken this level here, this one here, divided by that one, and if this is greater than a particular level, then it will put a value in here, and if it's less than that level, it'll put a 0. And the level I've chosen is twice. So basically I'm looking to say if the trade volume on a day is twice the level of the trade volume from the day before, then flag that for me, and then we'll look at the date. So the first of those dates we have is the 29th of February. And we'll see that we had 3.3 million units traded compared to 1.4 million. So that's $3.3 million compared to $1.4 million. And then we're going to go take the cursor onto the chart. I'm going to have a look for when was the 29th of February. It's the 2nd of February, 24, 25. The dates are at the bottom of the chart as I move the cursor across, 29th of February. And that just happens to coincide with the top. So let's put an arrow in there on the 29th of February, which is this one here. I just want to go and put my cursor back and make sure that I got that right. 29th of February, I got it exactly right. The next one down, as we look on the spreadsheet on the right, is the 5th of March. So we go across here and we slide across to the 5th of March, and guess what? We just hit the bottom. And then as we move down the spreadsheet, the next one that is significant is this one here, which is the 27th of March. So let's go and have a look at the 27th of March. And the 27th of March just happens to be the one at the top. Don't you love it when a plan comes together like this? And then the one after that is the 4th of April, which is this day here. So it's not quite the one at the top, it's the one before the top. So the 4th of April, the one before the top. So that's the top there, so it's this one here. The 4th of April. And then the last one on the chart is the 11th of April, and the suspense is getting remarkable because guess what? That was yesterday. Yesterday, the 11th of April. And I think what I'm going to do is that while these lines are on the chart here, I'm actually going to use the charting package to draw the lines on, because then when we look at them again, we will be able to check them out. So we want one on the 11th of April. And I'll make it a vertical line. And we want to draw one here. another one there. And then we want to draw one here for yesterday. And then I can just delete those and we can see those where the lines are. So you can see pretty strongly that there is a correlation between trade value and important moves in the market. Now, what does that actually tell me? What I can't tell is, and I'll need to dig around in the data a little more, is to go and see how many trades were actually happening. Because this could be nothing more than these ones on the top, especially as profit taking. It can be nothing more than profit taking. Is as the prices run up for a period of time, people jump out and they've mined their coins at a level, it reaches this horizontal line and out they go. This one's a little harder to identify, and my data didn't go back as far to work with this one. Now, what does this tell me? It tells me especially to be careful where we are right now. So I'll dispose of my spreadsheet. We'll make this bigger again. And the reason I want to be careful right now is the price is actually now, today, sticking its head up above that trend line. It's stuck its head up above that horizontal line. And those are normally resistance levels for, these are resistance levels for trades. And the last thing we want to do is to have a false breakout where something goes up, pulls back, and then continues doing what it's been doing. And the last time that happened to us, it formed just yet another triangle. And it also, because no, there was a trade opportunity here when we reached the bottom of this channel or this short-term uptrend line, but the risk-reward ratio between the low of that, the entry point, and this resistance line is too small to warrant taking the trade. And this additional data now is cautioning me that we could well be seeing one of these pull back and then reset on its journey. And if it's a pullback, when we notice these pullbacks, each time there's a pullback, they are big in size. That's the size, and this one's almost the same size. So if we actually, what I'll do is I'll draw that as I'll draw it the same way we've done here. So we're going to say the size of this pullback, and then we go and put that there where we are. If we get a pullback the same size as those last two relatively large ones, and this one is basically the same size, but it's happened over 2 or 3 days, we're going to be below the triangle and we're not going to know what to do. As always, I'll have a quick look at the momentum indicators to see if the momentum indicators are telling me if there's anything different I should consider, and I particularly will be looking to see if there is divergence. So divergence in the current situation is where we have a series of level highs, and if I have rising highs on the momentum indicator, then that tells me that there's potential for it to break upwards. And if I have a series of reducing highs or lower highs, it will tell me that there's a potential that this is going to break it down. So for the first one I will look at, as always, in my trading is MACD. And we can see that MACD here in the last period of time has basically just been tracking exactly sideways, and it is progressively producing higher lows, which coincides with these higher lows. And the highs, that high is exactly the same as that high, so it's totally consistent with what is going on there. So MACD is not helping me. because it's just confirming what's actually going on the chart. The stochastic indicator is another way of having a look, because it helps us with conditions of oversold or overbought, and if we had any one of these levels was oversold, then it would be telling us that things are actually going to moving upwards. So it's indicating in advance the move upwards. And so as we look at the one I've picked here, which is right in the center of the chart, that low there coincides. Or let's work from the indicator backwards. So what we're looking for is when this blue line re-enters this 20% level, so it re-enters the shaded area and or crosses over the signal line. And the so you see there's the crossover there, and that coincides with this level there. So we've certainly got a strong indication there from the momentum indicator to make the purchase. So as we move across to the overbought area, that overbought area is certainly coinciding with this correction here. It certainly told us that when it entered that blue area was the day before the correction. And if we go and look at the next one, when it entered the shaded area again, it was also exactly the day before that entry. And this then becomes the interesting one here. This one didn't really reach into the overbought area. It got reasonably close, and when it reversed, we got the correction. And of course, the important part is where we are right now on the 12th of April. Is that this indicator has made its turn. We don't know if that's a final turn because the day is not yet over. We'll only know that tomorrow. But it is now heading towards the shaded area, and that could be tomorrow generating a sell signal for us. So here I have the stochastic indicator is confirming my concern that we're going to have a sell-off. We could have a sell-off, and that it is not wise to try to trade this breakout. It is going to be better to confirm that there's not a pullback, or that we do get the breakthrough and the retest, which is what we like to see, was what I like to see. So I'd rather be waiting to avoid being caught out by this. So there's my analysis and the confirmation in my head as to why I am not going to consider a trade on Bitcoin. What I am going to look at, though, very briefly, is there an opportunity elsewhere? Because what's happened in the same period of time is on the Ethereum chart, we have now price has broken quite aggressively, and we have now broken out of the triangle, the short-term triangle that it's in, and it's reached back to the short-term uptrend line. Now the challenge always on here is that, so if we could say, is this testing a level here? No, it's not really testing a level here, but there's certainly a level there. So there's a price entry possibility to trade somewhere above this bar here, or depending on how these bars track. Stop loss would need to be here, somewhere here. So we'll just move that into a level there. I will draw in the trade size. So if we get an entry, say above yesterday's bar, with the stop loss level there, I'll clone that and we'll line it up to be, that's where our target level would need to be, which will be here, which is unfortunately above this downtrend line. So that's a hard trade to consider. Are we in a position to short Ethereum? Well, we could, if we take some of my models, we could, if it trades to there, we could go short there. Ideally, probably after it's crossed below this downtrend line, or we wait for it to do this and then go there. But ultimately, the fundamentals of Ethereum and of Bitcoin are such that I do not expect long-term the prices to be going down, so my preference is always going to be trading them long. So as we go, no trade for me on Ethereum, no trade for me on Bitcoin, although I am actively investing in both coins as a miner of Ethereum and of Bitcoin. So happy Bitcoining, happy trading, and happy Ethereuming, if there is such a word.